Thought we'd take a look at Seven West Media out this morning with a trading update, tipping full year earnings to nearly double, boosted by a really strong fourth quarter rebound in post-lockdown ad revenue. Costs are down, the company flagging positive momentum into the first quarter of the new financial year as well. Thought we'd look at them because last week before, here on the call, Nine Entertainment came up. Of course, the other big media group listed on the market here in Australia, and it actually went into the call's portfolio because the panel that day thought some of the big traditional media stocks were looking good and like Nine Entertainment. Far cry from 12 months ago when they were certainly out of favour. Owen, what did you reckon of the Seven West Media update and the stock itself?
Sorry, Koshi, I think I lost you for a moment there, but I was pretty surprised by the update, to be honest. I think it was good. If just to your point about looking attractive and the valuations, if you think about the EBITDA guidance, the earnings before interest, tax, interest and depreciation amortization, if I got that right, looking to between $250 and $255 million, which is pretty impressive when you can put that beside the market cap, which is around about $700 million. So in terms of valuations, it's actually pretty good to see a company like this, an incumbent that's actually trading at a reasonable multiple. It's also really promising to see that kind of connected TV arm, that streaming service that they've got going, which we're chatting on right now. It's always good to see a company that has struggled to make that turnaround, and particularly in share price over a long period, actually showing early signs of a return. So overall, I think it's a really interesting business. I think where it's going in terms of more advertising online. These are all really positive signs and green shoots that we're starting to see. For me, I'd probably like to see the full year earnings and really get a shake out of those costs. They said they're going to come in at the lower end of the range, which is always reassuring. But still, that cash flow comes in. They can do more with it. Reinvest back in the business, or even, dare I say it, maybe even a dividend in a couple of years if things keep going this way. So, all things considered, a very positive result for me.
Okay, so would it be a hold for you until the full year comes out?
Yeah, I think that's, just in terms of the way I invest, Koshi, which is primarily focused on growth businesses, I think that would be the most appropriate for me right now.
Yep. Okay. Michael, what do you think of the announcement and Seven as a stock?
Yeah, look, I like the look of it. I mean, we quite like businesses that are cyclical at the moment. So if we're expecting the economy to continue to improve, we want to be invested in businesses that will be leveraged to that improvement, and Seven West is one of those types of businesses. Good results. So the earnings came in above consensus estimates. Costs were at the lower end of guidance, as you mentioned in the intro. So these are all good things. When it comes to, I guess, reacting to announcements like this, it's always important to see the share price reaction as well, because as you know, if all of this is already sort of baked into the price, so you get a positive announcement but a negative share price reaction, then it's already telling you it's factored in. But in this case, we've had a situation where the Seven West share price has gone backwards over the last few months.
Yep.
So I guess there has been a bit of, uncertainty out there in the market. So for the company to announce a result like this and for the share price to react, I think at the moment it's up more than 10%. That's telling us that it was, in my opinion, probably a bit too cheap coming into this announcement. So I think the share price will continue on. I think as long as, if I look at the chart, as long as it stays above 44 cents, I'd say that this downtrend from the last few months is probably over, and I think the share price will appreciate. So the short of it is I'd be happy to buy it here if it stays above 44 cents.
All right. And you look at it, not so long ago, if we get the 12-month chart up, it was down at 9 cents only about 6 months ago. From 9, there we are, August, September, October, 9 cents, and now up to 47. So up by 4 times. If you had the guts to buy it back then, when things were looking a little fragile, a little uncertain. All right, so that's Seven West Media.